One of the key roles capital market plays in India is it mobilizes the long-term savings from different sections of the people through the sale of securities. Yes, I'll explain this concept of mobilization of long-term savings in a detailed manner. Understand, government organizations, industries, or industrial sectors are in great need or requirement of long-term funds. However, the financial arrangement for long-term fund is insufficient to match the demand. So, capital market is one of the easiest resources with industrial sector or government by which they can create a huge amount of long-term funds by way of sale of securities through different sections of the population. I'll explain this in a greater detail. Understand, industrial sectors, government sectors need long-term funds, but the availability of funds is insufficient compared to demand. So let's say for a company A, they are in demand of 10 crores of rupees. So how many of the people they'll get within or outside the country who are ready to pay them 10 crores? Very few or probably none. So what will they do? Yes, they'll do what? Individual people will have problems of giving them 10 crores as a long-term fund or long-term investment. There are various reasons. One, paying such a huge amount to only one entity is a big risk. Another, that there are very few people across the globe who will be able to provide you 10 crores, 15 crores, 20 crores as a long-term fund requirement. So individually, going from individual organization or institution, it has a lot of problems. So what companies does, in order to raise 10 crore fund, they'll float crore rupees or let's say 10 lakh equity shares in the market worth 100 rupees per share. Now, as companies floating 10 lakh shares of 100 rupees per share, now these stock market securities or stock market shares, equity shares, debentures can be purchased by even individual people who do not have even a huge amount of income. So even if their salary is in the range of 50,000 per month, but they still can able to buy some part of share and invest into shares or equity or debentures and still be a part owner of the organization. But there is a win-win for both. The organization or company will raise a long-term capital, and for individual they can invest their savings into much more returnable propositions. Hence, there is a mobilization of saving happens through equity market or through capital market. Hence, capital market mobilizes the long-term savings. In nutshell summary, capital market mobilizes the long-term savings means there are private sectors and government sectors who are in need of long-term funds. But it becomes very difficult to find individuals every time to provide them such a long-term funds. So what they do, they use the way of capital market and through the sale of securities or through stocks or equities or debentures, there is this money. But for individuals, that opportunity of capital market helps them to buy a part of that whole amount, that they can purchase one share or one security at a very reasonable 100 rupees, 200 rupees pricing, which is affordable to every pocket. So different section of the people can able to invest and can raise that money. Hence, the different section of people mobilizes their savings in different areas of capital investment. Hence, capital market mobilizes the long-term savings.